Hi, this is Dave, and welcome to the weekly market recap, closing out the week for Friday, February the 22nd. I'm recording this video on Saturday, February the 23rd, 2013. So I actually recorded this video. It was a rather long video, and unfortunately I had a technical glitch and lost the entire video, except for an intro. So I'm not impressed, to say the least. So let's just get right down to it and try to be efficient here with this video. First thing I wanted to talk about was we are running a meetup tomorrow at the Market Trading Concepts office in Burlington for the Burlington Active Traders and Investors Meetup Group. And we'll be hosting the meeting here. And the title of the meetup is there a coming secular shift setting up in the markets? So one of our trading room members at Market Trading Concepts is studying intermarket analysis, and he's been studying technical analysis for quite some time. He'll be leading off the presentation, and he'll be talking about is there potentially a coming secular shift setting up in the markets. So this is more of a technical analysis review of where what happened in the past, where we are right now. We're going to be openly discussing for commentary and opinion discussion only, not obviously not meant as any kind of trading advice, but we're going to be looking at just where the markets are, where they've been in the past, some of the things that can be looked at to get a heads up as to where the markets may be going, like different potential scenarios. So nobody really ever knows where the market is going, but what we're looking at is what story is the market telling now, and if that's the story it's telling, or it's telling this potential scenario versus that potential scenario, what might happen based on what's happened in the past. So it's really a scenario-based approach as far as I can tell at this point in time. And it should be very interesting because it focuses on something that, not a lot of people that are, focused on short-term trading look at, and that is intermarket analysis. So with that being said, it should be a good meetup. I'm looking forward to it. And let's just jump into this video. I was going to, kind of give my own slant on intermarket analysis from my, limited understanding of it. But instead, I'm just going to follow the normal format of this video and, just do a fairly quick review of, where the markets are this week and what I'm looking at from my perspective. So let's just jump into it then. Here's a chart of the Dow futures. Let's start with the Dow futures like we usually do on the daily chart. Now, what I'm going to do is I'm going to make a copy of this chart here because I want to kind of take everything off and just look at a clean chart. So let me just do that. I'm going to copy this chart, copy window, paste window, and that way what I can do is I can delete everything off of here except some of the stuff that I really want. So let's just do that. We'll just kind of clean this up. Let me pause the video. I'll delete everything off and then I'll start the video back up again. Okay, so here is a cleaner chart of the Dow and of the Dow futures, and what I'm looking at, I deleted a lot of the other noise off of the chart. I'm used to it, but other people looking at my charts might not understand what they're looking at. So here are I think the relevant things that we're looking at this week. We've been talking about this sort of box play, this box that has been, we've been consolidating in this box. We've tried to push above, we tried to push below on actually on Thursday. On Thursday, it actually looked like we were going to break the bottom of this consolidation range, and we were going to get, here, we were going to get a bigger pullback. And then what ended up happening was, we had statistically oversold short-term stochastics, and, we bounced back up into the top of this, resistance range of this box. Now, we've still got some highs here to contend with. Sorry, I just had to pause the video there to sneeze. Been feeling a little bit under the weather. Okay, so let's move on. So where did I leave off? So we have some highs to contend with here at, 13,955-ish. And then above there, a little bit higher, right around 14,000, I believe. Yeah, just over 14,000, which is a huge, psychological round number sort of resistance level. But having said that, we were expecting, because of this technical divergence, this is going to be kind of sloppy, but, we've been having the price going higher and we've been having the MACD going lower. So what we were expecting to have happen from a technical perspective is some sort of, significant pullback, but it seems like we had a very shallow pullback into, the 21 exponential moving average, which has actually caught up to the price action. So it's been a very shallow pullback to the lower end of this support range at 13,825, and we just didn't really get any lower, and then we just sort of bounced off that, and we still have this sort of technical divergence in play where price is moving higher and momentum indicators moving lower. So having said that, we've been talking about for some time that the market could, move into some of those. I believe it's the October 2007 highs, which are about 200 Dow points or so away, to the high side. But what would really make sense here is a more significant pullback. Now, I was sitting here in the trading office on Thursday, and one of our CSTA members, Bjorn, came down to to sit down and look at some charts and just talk markets with us. So that was it was good to have him here. It was good to share some perspectives with other market enthusiasts, other traders. So one of the things that Bjorn and I were looking at was we were looking at this the Dow being as high as it is, and what levels might be of interest in terms of a much needed significant pullback. Now I say much needed because it's really hard to do anything up here, and it would make sense to have a pullback down to some more key levels. Okay, I apologize. I had to pause the video again. This cold or whatever I have is really it's really wearing on my patience. So apologize for that. So let me just retrieve my train of thought here. Basically what we're looking at then is what are some key levels that would be of interest for a pullback, because I mean if you really look at the Dow, we're in a long-term uptrend, and until that significantly changes, we're not really looking to fight that, right? So one of the things that's something that I've learned through just through pain and agony. It's one of the things that I've learned in the market, like don't fight the trend until, it ends. So, and until proof of that. So at this point in time, if you really look at this, we could come up and tag those highs from 2007. But what would make more sense from a trading perspective would be to get a decent pullback. Now, a decent pullback, we were looking at some levels, and, this level here, from this low, major low, to this major high, if this is a high, in fact, we're looking at a confluence of levels coming together. So what do we mean by that? Well, if you look at, this prior swing points provide, support and resistance levels, because, this was a resistance level that the market couldn't get through. It pulled back. And then, once it broke through there, it congested, and then it popped higher. So this is a level we're keeping our eye on. Let me just grab the pen. So projecting this level forward comes in right in around here. Well, isn't it interesting that that level comes into, if we connect the dots here for this trend line, which is in a nice 45-degree angle, which is something we want to see for a sustainable, a sustainable sort of uptrend. That's where the sustainable uptrend is, that 45-degree angle. This sort of move here is not as sustainable. You want to see a nice sustainable angle. So looking at this trend line here, which I believe is the major trend line support trend line, it coincides here at this point in time, with this swing point and a 50% retracement from this low to this high. Well, isn't that interesting? This is a level that we would be, I'm sorry, rather a 61.8% retracement of, this low to this high. So this is an interesting level that we were kind of looking at and saying, if the market pulled into that level, that would be a level that we'd want to, let the market hit, see if it's going to find support and start moving off of. We might be interested in, that particular level, wherever these levels come together. But we would have to have a pretty quick pullback. So what we were hoping for on Thursday, or what I was hoping for rather, was, to see some weakness and then have a couple of strong days down. When I say strong days, I mean strong days down right into that level. That would kind of open up the door. It would flush out, all of the current market activity. That would open up the door for, a reset of the market and a higher risk reward scenario to take place where, the market would be tradable again. At this point in time, I'm not really interested in any swing trades at this point in time, just because of where the market is. We're so close to these highs, and, there's just not much to do in my opinion. So I hope that makes sense. One of our trading members from our trading room, Jay, sent us a really good article to me and some of the other members from John Murphy the other week. And, John Murphy was talking about in his article, you don't just want to look at one thing. You want to look at, a number of different, not a lot, but a couple of key indicators and, where those things might come together. So I call it confluence. Some of the other traders I know call it confluence, but this is, you're going to get more interest in the market and more activity at levels where, let's say, the fib players are interested, let's say, in this level, the trend line players are interested in this level, and, you've got different methodologies coming together at key levels. Those tend to be stronger levels where there's more participation and more activity. So those confluence areas are really, what I'm usually looking for to set up, trades where I'm more comfortable in, playing in those sandboxes in the markets. So that's all I have for, the Dow. I'm going to take a really quick look at the other, at the sister indices. Let me just, switch over. There is the S&P futures, same kind of story. We're coming into, from this high to this low, a 1618 extension. I wouldn't be looking for a lot of upside above that, personally, because that's really, typically, where the market's going to go, and that would probably bring us into those, 2007 highs. Anything can happen, but that's kind of what I'm looking at, from a reasonable perspective. If we look at the NASDAQ found some weakness. It's still finding support, but it looks dead in the water to me. You've sort of got this, I can just see by eye, this kind of trend line forming here where it pulled down, seemed to find support and bouncing off. So that's interesting. It's still above the 61.8% retracement of this high to that low. Keep an eye on it. Let's look at the transports. So the transports are, wow, they're really, really strong. You can sort of see this trend line going here. Transports haven't really let go. They're still holding that trend line there. I think I made a mistake in last week's video. I was talking about a measured move of, this breakout. So you've got this, this box here, and where it broke out, excuse me, let me just redraw this. So in last week's video, I was talking about how, we had the measurement of this move here projected from this point, but it wasn't actually this point. It was from the breakout above the box. And if you look at the breakout above the box, which is above this swing point, you can see that we've gone above that, we pulled back to it, and now we're pushing back above it. So to me, this looks like a really strong market. You've got a divergence in this market as well. Now, this divergence might potentially be corrected by this minor pullback that we had not only in the transports but also in, in the Dow. So at some point, that divergence where the price is going higher and the momentum indicators are going lower, we could get a crossover back to the high side and reset that sort of divergence there. So It's a strong market, and in my opinion, not much to do except to note it. Let's take a look at the dollar index. This is the key market to me right now. The dollar index, I believe, we're going to be talking about intermarket analysis. We're going to be talking about, what instruments might drive, the big trends coming up. And I believe that this is the key market we need to watch. This in the 30-year. So I'll go to the 30-year next. But if you look at the dollar index, you've got from this high to this low, a 50% retracement in play, but the dollar index looks like it's sort of put in a complex bottom. As we've been talking about in previous videos, the euro's been really, trending higher, and the dollar index has just kind of not been moving on a one-to-one basis. It's sort of just been holding on to support. So you've got support between, 78.84, 78.85, 79.28, and it's just been holding that support, and now it looks like it's put in sort of a complex bottom or a basing pattern, and now it's, it's breaking some of these swing points. And, you've got an 821 crossover there. My trending indicators crossing to the high side. The MACD's broken zero line resistance here, right? So if you look here, it's broken this this zero line resistance here on the MACD. And, we really need to get above this swing point and then ultimately this resistance level, which coincides with the 61.8% retracement. So this is sort of the scenario I'm looking for, to see if are we really going to get something going here where, the dollar index is going to, find strength and turn from a more bearish scenario to a more bullish scenario. That will really change the dynamic of, the current market trends. So that's sort of what I'm looking at as a heads up towards, it might not kick off a secular trend because secular trends are really, 10 to 20 year long-term trends, but it will definitely change the dynamic in the near future on where the markets want to go. So this is the key market that I'm looking at, is the dollar index, to get a heads up as to where other markets might be going, in my opinion. So that being said, let's look at the 30-year. The 30-year was another market that I thought might kick things off. And, we were looking for a break of this 143 and 3/32 support. I hate how they use fractions, but, that's just the market. 143 and 3/32, was a key support level. And you can see it kind of became a magnet. We traded above and below it. We ultimately held that support, which was surprising. I thought, bonds were done. And, this will be the support level to look at going forward. And then we just broke this trend line. So to me, that's telling and indicative of, what we thought might happen with the bonds going lower. It doesn't seem to want to be happening. It doesn't seem to be taking place. So we got to keep an eye on that. That's really a key point in my opinion. The bonds aren't going lower. They actually, put in a secondary support. So now you can treat this as a support band, in my opinion, between 142 and 3/32 and 143 and 3/32. And, you're breaking that downtrend line. So that to me is key. The dollar index to me is key. Those are the two key markets that I'm looking at to get a heads up as to, what might drive things going forward. So that's, those are the major things I wanted to talk about, in the market this week. We could look at other markets. I'll just flip through a couple of charts quickly, but that's really the key stuff that I wanted to discuss. Let's look at gold. Gold has been, we thought once gold broke this, spike low, that's probably being precipitated by the strength in the US dollar. But having said that, you have long-term support coming in around 1539, 1540, which is a level that we picked up on not only the daily chart, but a key level on the weekly chart. And if we look at silver, same sort of story. Silver's coming into, silver's coming into a potential 1618 move off of, this low to that high extension down. You've got some key support levels coming in around, probably, these lows anywhere from 26, the low 26 to, this congestion area around 27. So it's sort of a range in there. But you've got support levels down below, and then you've got this 1618 potential support, extension down. But these markets look weak. I thought they were going higher once we broke this trend line, and then we seemed to put in a lower high. But then once they failed this trend line on the second test, and then we broke that low, that was, to me, that was it. You just can't really trust the long side anymore in those markets. So that being said, that's sort of what we're looking at. If we look at a bigger, let's look at the fibs from that perspective. We broke that 618. That's basically where the 618 was from that low to that high. We held it initially, and then it looked like we were going to start trending higher. So that is a story in itself, and I believe that the weakness in silver, gold, and some of the other commodities are being driven by the U.S. dollar. So we really need to look at the U.S. dollar and the 30-year bond, which I thought was another key market that might give us a heads up. So let's look quickly at crude oil. Crude oil, failed that 50% retracement from this high to low, and it is essentially still, above this downtrend line. It could come all the way back and test this downtrend line. It could come down and test this trend line. So I'm more bullish than bearish on oil. But having said that, it's showing some signs of weakness. It's coming into its zero line support from an indicator perspective on the MACD, which is something that I look at. So I'm more bullish than bearish on it. But major resistance is 101. Major support, in my opinion, is around 88 to 90. So it's really just stuck in that range. It doesn't look really that interesting either way. This looks like a minor double top. At this point in time, I wouldn't really know what to do with it except note those key levels. But it's not really that tradable in my opinion, at least at this point in time. I don't see anything. Let's take a look at natural gas. Natural gas is just kind of sloppy here. It's still above this low, but it's kind of holding this trend line here. It would, in order to get something going, I believe it would really need to break decisively above this trend line here. That's essentially what I'm looking at, and it would need to hold this low, and it would need to break above this trend line. So I really don't have much on it. It's sloppy. I wouldn't want to trade it. But it could potentially go bull on us above this trend line, and it could potentially go bearish on us below that low. So those are the key levels that I'm kind of looking at in natural gas. So that's all I have this week. I don't think there's anything else major to talk about. Like I said, just to recap, stock indices had a minor pullback, a shallow pullback. It may be that that's all we get out of the stock indices. I was looking for a deeper pullback, better risk-reward scenario to get interested in the market. At this point in time, I'm not really interested in the stock indices from a swing trading perspective. We're so close to the 2007 highs that, in my opinion, there's not much to do. Dollar index looks like it's putting in a bullish sort of complex bottom. There's some key levels we need to break above, which could be the driver of some intermediate trend changes. I think the U.S. dollar is the key market to watch for a heads up on macro direction in the short term, and by the short term I mean over the next 1 to 3 months or the next 1 to 4 months. The 30-year bond is holding support and breaking a downtrend line. That is sort of bullish for the 30-year. So it's not breaking support. It looks like bonds want to stay a little bit higher. They're more bullish than bearish above that trend line that we assessed and that we looked at. I think that's another, I'd probably rank that, US dollar, keep an eye on for a heads up first, 30-year bond second, and the stock indices third at this point in time. And commodities, just, the various commodities we looked at look lower. So that's all I really have this week. Good trading and good investing. Hope to see you at, tomorrow's meetup or at an upcoming CSTA meeting or, at the next video update. So good trading and be well. Enjoy the rest of your weekend.